Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast Network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast.
Ozcast.
Simply head to ozcastnetwork.com for details.
Ozcast.
Okay, so you flagged some really interesting headlines for us today. We're seeing movement in Bitcoin, XRP, ADA, and then this news about Nvidia taking quite a tumble.
Yeah, it looks a bit disconnected at first glance, doesn't it?
Exactly. So for this deep dive, we really want to figure out how these pieces fit together. You know, what's the actual link between the crypto market doing its thing and a tech giant like Nvidia seeing a big drop?
Right. The mission here is basically to connect those dots. We've got the crypto reports, Bitcoin, XRP, Cardano all down, and then this Nvidia news dropping after hours because of chip sale restrictions to China.
Restrictions tied to previous administration policies, the sources mentioned.
Correct. And it really highlights how quickly something happening in like traditional tech can send ripples straight into the digital asset world. It's quite interconnected.
Okay, so let's start with Nvidia then. An 8% drop after hours. I mean, that's pretty significant. What was the main reason for that?
So the big catalyst was this announcement of a huge $5.5 billion charge.
Wow.
Yeah. And it's a direct result of the U.S. government stopping Nvidia from selling its H20 chip to China.
The H20.
Yeah.
That's one of their big AI chips, isn't it?
Exactly. High performance, designed specifically for AI, and well, China's a massive market for that stuff. So banning sales there, that's a serious financial hit for Nvidia.
And it wasn't just Nvidia stock that reacted, was it? You mentioned NASDAQ futures dipped too. Why is that important for, understanding the crypto side?
That's a really crucial point. The fact that NASDAQ futures fell over 1%, it signals that the bad feeling wasn't just about Nvidia.
Oh.
It created this broader caution, maybe more risk aversion across the stock market generally. And that's the link. When investors get nervous in traditional markets,
The nervousness spills over, right?
Precisely. It often extends to areas seen as maybe higher risk, and historically that's included crypto. It shows this wider anxiety about maybe instability in the tech sector, which worries people.
Which makes sense. Tech's seen as such a driver.
Exactly. And that worry then gets amplified in assets like crypto, which can be seen as more speculative.
Okay, so that leads us right to the crypto price moves. Bitcoin pulling back from that 2-week high. XRP, ADA also down. It feels like more than just a coincidence happening right as the Nvidia news hit.
It's very likely there's a direct connection there. The prevailing idea is that this dampened investor mood, starting with Nvidia, put downward pressure on crypto.
So Bitcoin retreating, XRP falling over 2%, ADA down 4%. It's a pattern.
It is. It suggests a correlated response to that broader market unease. And what's really interesting, actually, is that the AI-related coins, they apparently did even worse.
Oh, really? That makes a kind of intuitive sense, though, doesn't it?
So.
Well, Nvidia is just so dominant in AI chips. If they get bad news, it could naturally just, dampen enthusiasm for crypto projects focused on AI, like a bellwether for that specific niche.
That's a great way to put it. It affects the big tech stocks and the related emerging digital assets. It really shows how fast these narratives and just the general market feeling can spread.
So the Nvidia news wasn't just about one company's balance sheet.
Not at all. It served as a kind of potential warning sign for tech, especially around, global trade complexities and potential disruptions.
And speaking of global trade, the info you shared mentions these ongoing China trade tensions, which really started a few years back. How does that history play into this reaction now?
Well, connecting the dots, these Nvidia chip restrictions aren't just a random event. They're an outcome of that sustained friction between the U.S. and China.
Right. It's been simmering.
Exactly. And these ongoing tensions, they just create uncertainty for everyone, businesses, investors. The market's constantly trying to guess the economic fallout. And Nvidia's $5.5 billion charge, that's a very, very concrete example of that fallout.
Okay. The material also points ahead to a U.S. retail sales report for March. What role could that data play? Could it change the mood?
Yeah, the market's definitely going to be watching that report closely. The expectation, I think, was for a pretty decent jump in consumer spending, like 1.2%, up from 0.2% in Feb.
So strong spending could be good news, maybe ease some worries.
Theoretically, yes. Strong sales could suggest the underlying economy is healthy, maybe calming some of those recession fears that trade fights can stir up, but
As always, but
there often is. The analysis rightly points out that the market might just see this data as backward-looking, meaning it reflects what happened last month and maybe doesn't fully capture the impact of newer worries, like these escalating trade tensions highlighted by the Nvidia news.
Okay. So the market might think, yeah, spending was good, but what about now with this uncertainty?
Exactly that. Investors tend to look ahead, focusing on future risks and prospects. So even if the retail numbers are positive, they might not be enough to completely erase the concerns from the Nvidia situation and the whole trade picture.
Which raises the question, what will shift the mood next?
Well, the material definitely flags Fed Chair Jerome Powell's upcoming speech as potentially a big one.
Right, at the Economic Club of Chicago. What are traders listening for there?
Everyone's going to be hanging on his words, looking for any signals about how the Fed might react to these trade tensions and, the related worries about the economy slowing down.
Specifically rate cuts.
Yeah, specifically, they'll be parsing his language for any tiny hint that the Fed might think about lowering interest rates sooner than they'd planned. The thinking is if the trade situation gets worse and hurts growth, the Fed might need to step in with more accommodative policy, cut rates to stimulate things.
And the analysis mentioned something about inflation break tendons, that they've actually declined. Why is that relevant to what the Fed might do?
That's quite insightful, yeah. Declining inflation break fans basically suggest the market isn't expecting inflation to run hot because of tariffs.
Wait, tariffs usually mean higher prices, right?
They can increase the cost of imports, yes, but they can also dampen overall demand, which can actually lower inflation pressure overall. So if the market thinks inflation isn't a big worry,
And growth is a worry because of trade.
then that potentially gives the Fed more room, more flexibility to think about cutting rates to support the economy without worrying too much about causing inflation to surge. These break BEMs are basically the market's bet on future inflation. If they're falling, it suggests investors are maybe more worried about slower growth.
Got it. And the info even brought up comments from Fed Governor Waller about potential bad news rate cuts. What did he mean by that?
Yeah, Governor Waller's comment, it highlights a scenario where the Fed might feel forced to cut rates, not because the U.S. economy itself is weak, but as a reaction to, negative shocks from outside specifically. He mentioned the reimposition of those broad tariffs.
So one's announced a while back, but mostly suspended, except for China.
Those are the ones. If those wider tariffs suddenly came back, it would probably cause significant disruption, and that could force the Fed's hand, making them cut rates quickly, even if it's seen as responding to a negative policy-driven event rather than just, normal economic management. A bad news cut.
Okay. So pulling all of this together,
Yeah.
synthesizing everything we've discussed, what are the core connections, the main takeaways from digging into this?
I think the absolute fundamental takeaway is just how clearly this shows the increasing interconnectedness between traditional finance and crypto. It's not separate worlds anymore.
Definitely seems that way.
Events in the tech sector, especially when they involve global trade, geopolitics, they can hit digital assets fast and hard. And investor sentiment, that's the powerful transmission mechanism.
Like a mood spreading.
Pretty much. Bad news like the Nvidia drop makes investors cautious. They pull back from things they see as riskier, and that often includes crypto.
It really paints a picture of the global financial system as this complex machine, doesn't it? Where one gear jams and it affects other parts.
That's a perfect analogy, and it really underscores why it's so critical, even if you're mainly focused on crypto, to keep an eye on these macroeconomic factors. Trade policy, Fed moves, general investor confidence, they're not side issues.
They're all part of the same big interconnected system.
Exactly. Integral components.
So, we started with these news items that looked separate, crypto dipping, a big tech company having a bad day. But after this deep dive, it's much clearer.
Hopefully. Yeah.
We can see how that Nvidia news really acted like a catalyst. It soured the overall mood towards risk, and that contributed to the downward pressure we saw in the crypto market.
Precisely. Understanding these sometimes subtle connections is just essential if you want to navigate what's happening in finance today.
Absolutely. And maybe just a final thought for our listeners to chew on. If geopolitical events and tech developments in one area can ripple across markets like this, what other, maybe less obvious correlations might be shaping the financial landscape right now?
That's a great question. Always worth looking for those hidden connections.
Definitely something to think about. Thanks for joining us for this deep dive.
Are you a podcaster? Maybe you've got that big idea and you're looking for a network to join. The multi-award-winning Ozcast network can get your content to eyes and ears all over the world. Join now for the first month free, and you could be featuring this sound at the beginning of your podcast. Ozcast. Simply head to ozcastnetwork.com for details.